Hello and welcome to Long Investor. So let's go over the market for this week and what to expect for next week. So first off, I did no trade on Friday. And as you have known, I added TQQQ on Thursday when it was near the end of the market. So to me, that was around the 13K add-in. And I've talked about my next add-in would be the 12.5K. So for now, I'm still holding. And on my last video, I talked about that a lot of things are priced in at the moment. And in the past history, when the interest rate does go up, the market tends to go up with it together. And it's simply because as the interest rate is getting up higher, the impact of the rates of interest rate doesn't really affect until it reaches a high level and it's sustained for a period of time. So as you can see in the past, the interest rate hold up at the top for a period of time before the market start to cool down. And the same thing happened back in 2000. And 2018 is a little bit different because we had COVID in 2020. And actually COVID saved the market as the Fed switched from QT to QE in a very short period of time. And the main reason why the market doesn't fall until the rate hike reaches the high level is because currently we're still at 0.2%. Even with the 50 or 75 basis point, it is still under 1% at the moment, and it will slowly add up to maybe 2 or 3%. And by that time, the interest fee will become a big part of the costing. So during the time when the interest rate is going up, a lot of companies can still handle the costing. So I've talked about price in and just exactly how much the market is pricing it right now. So we take a look at this data right here. So currently the market is pricing in for a 75 basis point. And so if after the FOMC meeting and if 75 basis point is confirmed, and since the market has already priced that in, and it will tend to have a market recovery. The same thing happened during the last FOMC meeting between March 15th and 16th. As you can see, about a week before the meeting, the market has been pricing in. And after the data is released, the market has a strong recovery. So the FOMC meeting is about a week away. So during next week, we might see a little bit of more downside, but it also depends on some of the big earnings next week. So overall, this 12.5K is a pretty good support level. And if those big companies miss their earnings next week, we might see the market drops a little bit lower, maybe to the 12K level, which add as a few toppings in 2020. So for the earnings next week, you have Microsoft and Google on Tuesday, you have Facebook and PayPal on Wednesday, you have Apple and Amazon on Thursday. So the earnings from these companies can definitely move the market. So for next week, we might see a little bit more volatility before the FOMC meeting. But my plan remains the same. I'll be adding in at 12.5K and possibly save a little bit more cash to add in at the 12K level. And as for the insider transaction ratio, I've talked about this previously. And at this moment, we're still in the bullish case as there are more insiders buying their own company stocks compared to selling. So that is usually a good sign. And then we still have people buying in the tech sector despite the market dropping since December of last year. And another data that I want to discuss is the market breadth. So we're looking at the stocks above the 200 moving days average in the nasdaq 100. So that is the percentage of stocks in the nasdaq 100 that is trading above the 200 days moving average at this very moment. As you can see in the past few weeks, we have the lowest rating of around 20%. And back in COVID, we have as low as under 10. And then the 2018 recession, we have under 10 as well. So if you are treating this as a recession, then we still have some room to drop until it reaches the 10 level. But as I've talked about a number of times in my previous video, I don't believe we're in a recession just yet. And I also talked about how I believe the market will have another bull run starting as early as June. So currently I'm treating this as one of the major correction just like in the previous past. And if you put the nasdaq 100 on top, you can see every time when it bottoms around the 20 to 30 level, there tends to be a market rally following afterward. So even if you are treating the current market as a recession, that we might possibly see the breadth index hitting the 10% mark, then we are currently on this level, which is still not too far from the bottom. So this will be around 10-15% from the bottom, and the same thing goes here. So let's say we're at 13K for the moment, and if we're going to drop for 15%, then we'll be in the 11,000 zone. So if I'm adding at the 12.5K and 12K, I'm still not that far away from the 11K, which is the bottom of the 2020 market right here. So the risk reward ratio is still very favorable to be buying in at this moment. And since I'm not treating this as a recession, so I don't think we'll be seeing the 11K. And with the volatility of the big tech earnings, we might see the market going up and down quite a lot for the next few days. Unless all 6 of them miss the earnings, then we might see the market going to the 12K or a little bit under the 12K area. So if the earnings are half and half, we might see the market bouncing between the 12.5K to 13.3K area until the FOMC meeting. So that is all I wanted to share today. If you liked the video, do hit the subscribe button and give me a thumbs up, and I'll see you guys next time.